SA 560. Subsequent events. Relevant applicable Ind AS is Ind AS 10. Subsequent events are the events which occur between balance sheet date and date of approval of financial statements by Board of Directors. Subsequent events are of two types: non-existing events, existing events. Non-existing events. Events other than the existing events are non-existing events. What are existing events? Events which give more information regarding uncertainties, that is, conditions which are existing on the balance sheet date, are existing events. In case of non-existing events, there is an additional requirement as per Ind AS 10. Material non-existing events should be disclosed in notes to accounts. As per SA 560, subsequent events. Events after the balance sheet date till the date of signing audit report should be considered facts. Facts which were existing as on date of signing audit report, but which became known to auditor afterwards, need to be considered, based on which opinion need to be considered. Audit procedures differs when auditor came to know about facts before publishing financial statements and audit report, after publishing financial statements and audit report. For example, consider 31st March, it is the balance sheet date, 10th June is the approval date, 20th June is the audit report signing date, 15th July is the publishing of financial statement date, 20th September is the AGM date. From balance sheet date to date of signing the audit report, it falls under events. From signing date of audit report to publishing of financial statements, it comes under facts before publishing financial statements. From publishing of financial statement date to AGM date, it falls under facts before publishing financial statements. Auditor may came to know that about facts anytime in future. If he comes to know facts before AGM, then it is easy to amend financial statements and audit reports. If he comes to know after AGM, it legally becomes difficult to amend, so it is better to amend in the next year. First, events occurring between date of financial statements and the date of auditor's report. Events between balance sheet date to signing date of audit report are subsequent events as per SA 560. Duty of auditor. Even after year end, auditor is supposed to perform audit procedures and collect sufficient and appropriate audit evidence that management has identified events which needs adjustments and things which need disclosures, and gave them proper accounting treatment as per financial reporting framework. If auditor has checked subsequent events of some areas like debtors, creditors, etc., then no need to check them again. Audit procedures. Understand management procedures to identify subsequent events, inquiring management and those charged with the governance whether any subsequent event has occurred. Read minutes of meetings, or where minutes are not available, inquire about the matter discussed in such meetings. Example, information about proposed dividend, bonus issue, etc. Read entity latest subsequent interim financial statements. Treatment of existing events. If auditor identifies events require adjustment or disclosure, auditor should ensure that such events are properly reflected in financial statements as per applicable financial reporting framework. Else, modify the opinion. Written representation. Written representation from the management or those charged with the governance, assuring that all the events occurring after the date of financial statements are properly analyzed and accounted for as per applicable financial reporting framework. Matters which should be included while inquiring subsequent events. Auditors specific inquiries in following matters regarding assets: sale or acquisition of assets which are occurred or planned, assets appropriated by government or destroyed, events have occurred that affects recoverability of assets, capital or liability, increase in capital or issuance of debt instruments, new commitments, borrowings or guarantees, events affecting measurements of estimates or provisions, any development regarding contingencies. Overall, unusual accounting adjustments, any event which question the appropriateness of accounting policies. Auditor may inquire from management or those charged with the governance regarding current status of financial items which are uncertain and accounting on the basis of preliminary or inconclusive data. Next, facts which became known to the auditor after the date of auditor's report but before the date of financial statements are issued. Auditor's duty. Auditor has no obligation to perform any audit procedures after date of audit report. But if he comes to know any facts is existing as on date of audit report, which if known earlier would have changed opinion of auditor, then auditor has to perform audit procedures, discuss matter with management and those charged with the governance, determine whether financial statements need amendment, inquire how management intends to amend financial statements. If management amends financial statements, perform audit procedures on the amendment unless restricted by law. In India, auditor has all the rights till the date of AGM, so auditor can perform these audit procedures. These audit procedures include extending audit procedures to the date of new audit report, provide new audit report on amended financial statements. Auditor should not sign date till new financial statements are signed, that is approved by BOD, Board of Directors. If management does not amend financial statements, if management is not amending financial statements, whether law, regulation, or financial reporting framework requires amendment, law says it, law says it is required, and law does not make it mandatory, but auditor thinks it is required. Then, in all such cases, if audit report is not provided to the entity, auditor should modify the opinion and give his report. If audit report is already being issued, auditor should notify management and those charged with the governance not to issue financial statements to third party before amendments. If management doesn't listen to auditor, then auditors should take appropriate action to prevent prevent reliance on auditor's report. Public notice, speak at AGM. Other amendments. Law, regulation, and framework not prohibiting management from making other amendments, that is, amendment other than the amendment because of subsequent events. In such cases, auditor may go and check other amendments, or auditor has option to restrict his audit procedures only to the amendment because of subsequent event. He shall do either of the following. If he wants to restrict his checking, he can do dual dating. That means he can mention old date and new date also. Dual date means amend auditor's report to include additional date along with the original audit report date, specifying that we restricted audit procedures only to subsequent events amendment as described in notes to accounts. Auditor can include EMP or OMP, which clearly express that auditor has restricted audit procedures solely to subsequent event amendment. Next, facts which become known to the auditor after the financial statements have been issued. All the steps or points in this area are similar to the previous concept. There are few notable changes given below. If management decides to amend financial statements and auditor gives new audit report, management should inform everyone who received old financial statements and audit report not to rely on it and wait for new set of financial statements and audit report. In new audit report, auditor should put EMP or OMP explaining revision of financial statements and referring to para in notes to accounts which explain detailed reasons for revision. If management does not take appropriate steps to inform people receiving old financial statements to discard it, auditors should inform those charged with the governance. If those charged with the governance does not take necessary steps, auditors should take steps to prevent reliance on old audit report. That means by giving public notice or speak at AGM. Next, first order of signing. Generally, management will sign financial statements first, and later on, auditor will sign the audit report. The revision of financial statements will be done as per Section 130 or 131 of Companies Act 2013.